Hey, Denver real estate investors, Mark Cunningham with Grace Property Management. Every month we put out an educational video talking about something current event in the property management real estate investing space here in Denver. And every once in a while we will talk specifically about market rental updates and the trends that we are seeing for demand on rental properties specifically in Denver. Now, the data to get on this can be a little bit confusing. So what we've done here is we've pulled data from a number of sources, from rentrange.com, from apartment rental sources, from Zillow, and a number of other sources, and kind of put that data together to try to get a big picture overview of the Denver market, not just from a numbers standpoint, but even more importantly, from a trends standpoint. Is there more demand for rentals? Are rents up? Are they down? How are things trending? So this is by no means scientific data. It's us viewing data from a number of sources, putting it together, and kind of tweaking the data to be accurate for a number of different types of properties. So here's what we mean by that. What we've done is we've looked at 5 different categories. We've looked at average rents, month over month change in rents, year over year change in rents, number of vacancies, and average days on market. Now, when we look at the total Denver market overall, and we're just looking at Denver, this includes some suburbs of Denver, but all property types as well. So that includes single family homes, it includes condos and townhomes, it includes small multifamily, large multifamily. So it's a big segment of the market, but we'll break that down in just a moment. So here's what we see as of April 2024 happening in the Denver market right now. Average rents, $2,077 per month. Now keep in mind, that includes executive single-family homes and little one-bedroom condos. So it's not a real meaningful number other than what we're going to see on the trend with that, but that's the average rent. The average month-over-month change is actually down $18. So for April 2024, the average rent in all the data is down just a little bit month-over-month. The average year-over-year is down a larger number. $73 is the year-over-year decrease in rents. Total number of vacancies, 3,400. If you're wondering why you're having trouble getting your property rented right now, well, it's because you're competing with 3,399 other rental properties for rent right now in the Denver market that are going after applicants. And the average days on market, 42. By historical standard, that number is high. That's a lot of days to be sitting vacant to get the average rental property filled. Now, where this data gets interesting and is probably relevant for you is when we break into 2 different segments. We've been doing this since 1978. There has never been a time that we have seen the market this segmented between single-family activity, single-family demand, and multifamily demand. And when we say multifamily, we mean apartments, condos, and townhomes. So even if you own one condo or you own one townhome, but it's in a townhome complex or it's in a condo complex, you are competing against other multifamily properties where they may build a high rise with 20, 40, 300, 2,000 rental properties in a complex, even if you own one. And what we're seeing is the demand really get different between single family and anything we're considering multifamily. So let's look at apartments, condos, townhomes, break that out and see what those are showing as it compares to single family. Average rent, $1,850. The month over month change in the apartment, condo, townhome market is down $30. That's a significant drop month over month. Now, sometimes the months do waver pretty substantially just based upon the weather, based upon demand, based upon holidays, but we see the year over year change is down $65. Rents are down for condos, townhomes, and apartments in the Denver market. We've been seeing that in our data internally as well. It's harder to get those things rented as compared to last year. Why? Well, 2 reasons. Number one, because the number of vacancies, 2,700. So remember, there's a grand total of 3,400. 2,700 of those are condos, townhomes, and apartments. And a lot of the landlords that own these condos, townhomes, and apartments are being very, very aggressive in their pricing. They're offering move-in incentives, they're offering free rent periods, they're offering rent credits, especially in these new construction properties, and they also have fabulous amenities. The reason they're offering those rent credits is because there's less demand right now and more supply. So that's why we're seeing the net effect of rents is going down. Now, one interesting thing to note is this rent decrease year over year doesn't even include incentives. So a year ago, there were very few incentives, move-in incentives that landlords were offering to these tenants. At the same time that rents are going down, incentives are also going up. So for example, a landlord may say, gosh, for the first month, it's a half-month rent credit up front. So not only are the rents down, but they're giving away a half-month rent on the front end, which really makes this number even greater than the number actually shows there when you factor in incentives. So that segment of the market, condos, townhomes, apartments, is weak as it relates to renter demand. A lot of supply, not as much demand. Now here's where the market gets very, very bifurcated, meaning very, very different in the stats. And that is, now we're going to pull out single family homes. So single family homes, we see this. Average rental rate is $3,000 a month. The average month over month change is up $55. So whereas the condo townhomes market has dropped by $30 month over month, single families are up. Now $55 a month change, but it's only $50 year over year. So the increase annually in single family homes, when the average rent is $3,000, but the average rent increase is only $50, that is very, very small. That's barely, what was that, 1.5%? I believe that'd be a 1.5% increase over that price, not even that, over that price point. So we're not seeing a lot of rent increases, even in single family properties. The number of vacancies, only 700. A lot less properties for rent as it relates to single family. Why? Because most single family rental properties are owned by individual, small, mom and pop type landlords. They don't own 50 rental properties, they own one, they own two. So there's just a lot smaller number as compared to 2,700 apartments, condos, townhomes. Average days on market, only 36. Now that's still up by historical standards. That's still higher than we've seen in years past. It's taking over a month for the average single family property to get rented, but compare that to the condos, townhomes, which is taking almost 2 months to get rented. So what do we decipher from all of this data? The numbers are interesting, but the trends are what tells us a lot. The trending rental rates for single family are trending up, but only slightly. The trend for apartment, condo, townhomes rents are down a little bit. And the number of properties continues to trend up for apartments, condos. The strict number of properties continues to trend down, partially because some small-time landlords are selling these properties for some of the legislative issues that I'll mention here in just a moment. And then the average days on market is trending up. So demand is slowing, supply is increasing overall in the market. That's why we're seeing rental rates kind of come down a little bit. Now keep in mind, if you're an investor, we're coming out of literally a decade where there was a lot of demand, there was low supply, and rental increases on an annual basis were pretty strong. So 3 recommendations to you as a real estate investor on what you do with this data if you own one property, if you're thinking of buying a property, or if you're thinking of buying more properties, or maybe even selling the property you're in now. Number 1, we recommend to our owners investors that you prioritize renewals right now over rent increases. Now, some of this is just the reality. You can't prioritize rent increases because the market is not allowing rent increases right now. The last thing you want as a landlord right now is a turnover in your property, because if it turns over, your tenant's going to move and you're going to have 53 to 36 days vacant on average, depending on the property. You're going to spend some money fixing it up. Repair costs are up. So not only do you have vacancy period where there's no rent coming in, but you're going to spend some money to fix it up, and those repair costs are higher because of inflation. And then the new rental rate you're going to get potentially is lower than it was last year, or maybe it's a few dollars higher if it's a single family, but it's not that much. So this is not a good time to have turnover for you as an investor in your property. Secondly, we always encourage, especially right now, long-term investors focus on single family investments. If you're an investor and you're considering buying a condo versus a townhome versus a single family, our strong recommendation is purchase the single family home. It's going to perform better for you financially over the course of years. There's going to be more demand for that. The rental rate is stronger and it will more stable, less turnover. It's just a better long-term investment, and we see that in the data looking at all types of properties over literally decades of managing properties here in Denver. And third is this: be prepared for very significant legal changes. We're recording this video in early April. Right now there are, I believe, 13 pending state legislature bills that are being considered by our legislature. And when these, if they pass, which some will, a lot of them will immediately go into effect, and they're very significant in the changes. In upcoming months, we will be sure to dissect each of those to explain how they impact you as a real estate investor and impact you as a resident in Colorado. Last year, we saw a lot of dramatic ones. This year, some of these are even more dramatic than last year. So more to come on that. But if we can be a resource, if we can be a help to you as a real estate investor in Colorado, please consider us a resource. You can visit our website, rentgrace.com. We're happy to provide you with a rental analysis to determine what your property would rent for. If you're a current client of Grace Property Management, thank you for that. And know that we're working to balance your property, maximize your lease renewals so that you avoid turnover. But we're happy to be a resource if we can, and we wish you success.